Ron here from the hit podcast, The Other Side of Wall Street. And if you're like most of us here in the trading community, you no doubt have mentors or experts that you look up to for trading advice and knowledge. Well, how many times have you wished you could just sit down with one of those experts and have a good old one-on-one conversation with no script, no planned questions, just a friendly chat? Well, that's what we're bringing to you here. Each week, we'll visit with a different expert and have an up-close and personal conversation about anything and everything involving trading. So sit back and enjoy as we get to know our special guest.
So we love zero spider, either call spreads or put sides. Within the first 30 minutes, if we can call a short-term top or bottom, we put that one on. And then we're looking to leg into the condor if it does a counter trend rally and then stalls. And then also on Fridays, obviously, for those, whether it's a monthly expiration, the third Friday of the month, or they have weeklies, that's our go-to also. We actually have some traders who they say they make their living with us trading Fridays only. They follow us, they come with their own picks, and we love earnings and gapping stocks on Fridays in particular. Why? Well, because we're going to most of the time get a good pattern, whether it's from a shock of a breakaway gap or if it's a shock, a downside shakeout, whatever the case, we need a pattern. But volatility, even after earnings, within the first hour to even two on Friday expiration day, we still get very good premiums for those. And the FANG stocks, provided they're liquid, those are always, earnings or not, those always give us pretty good premium on.
And like I've seen you say before on your videos that it's much easier using technical analysis to predict where the market's not likely to go in a period of time, as opposed to trying to predict where it's going to go.
Right.
And which is one of the benefits of what we do.
Right. We many times have a directional bias, but the luxury of selling credit spreads or naked options is we win 2 out of 3 directions. If you're buying a stock delta of 1, you are only going to profit if that stock goes up. Penny for penny, you're losing money penny for penny if it goes against you. On selling options, it can bobble around and go against us all the way to our break-even point at expiration.
Yep.
And a saying that we have is, look, the stock went against us and we still made money.
Yep. Do you have any kind of adjustment techniques in the case that the market does go against your position, or is it purely a stop loss and you close it?
Good question. It depends. We define a stop loss as the predetermined point on the chart where the technical reasons for entering the trade no longer exist.
Right.
So we exit to protect our capital. So see, that's a very logical approach to running a business. Mm-hmm. We trade stocks and options just like Nordstrom manager, exchanges merchandise.
Right.
That's all we're doing is exchanging merchandise and at a better price, and the difference is our profit. So we don't get emotional. We don't trade stocks or companies or management or iPhones. We're trading technical patterns with the human emotion, as you said, that's embedded in it. So we don't get concerned with that, and it can go against us, and we still make money. That's the time decay component. But to finish answering your question, if the pattern is destroyed and I don't want to be in that because it failed, we stop out. If we make an adjustment strategy or leg into a different setup, everything we do is based on the charts. And there's sometimes where we will initially leg into a condor, mm-hmm. and then if it stops out on the put side, for example, and the pattern looks great to hold the call spread, then we just stop out of that, and we now have a bear call spread. If it really looks bearish, then we might only stop out of the short put and keep the call spread in the long put.
Mm-hmm.
So when I teach my seminars, I actually included a picture of the graphic, and I don't know if you've been to these music halls lately, but you know how they do the make music, and they have the DJs, and they're just there changing these dials.
Oh yeah, I've watched that. It amazes me. Yeah.
Yeah, I don't even know what it's called, but I grabbed a screenshot of that because that's what I feel like we're doing in adjustment strategies. Do I need a little more, bass or treble or lights?
Mm-hmm.
And then we just go to the option table and we either put something on, we'll take it off to match our bias of the underlying.
One of the other things that we focus on heavily is trading psychology. So since you deal with students, and have you found how psychology affects their success, even though you're teaching them the right techniques to do it, when this starts messing up what you're teaching?
Ron, we both know that I can start with a class of 30 people, and let's just say they all get an A+ on the final exam, so they have the book knowledge down pat. And then I say, because we used to have trading labs after the courses, and I say, okay, we're going to do this setup. I want you to trade it off a 15-minute chart. I want you to trail pivots. And yep, we all know what we're doing. I'll get 30 different answers on their simulated P&L. Every one is because of the psychological component. And then we go around and ask them, well, why did you sell that? Well, I thought this, and, I thought that was going to hold. And then I heard the news said something about it. Another guy, well, I looked up on Yahoo Finance, and they got, you get all these different reasons for not following the rules. So yes, the psychology and the discipline to follow, it's the discipline to follow your trading plan. And that just comes with seasoning.
I know when I first started trading, I was working on Wall Street actually, and I was one of my first big jobs was trading the firm's money I was working at one of the big firms, and I was doing fine, knew everything was going great. I thought I knew everything about everything. Decided, why am I here doing it for these guys when I could be at home doing it for myself? Right. So quit, went home, set everything up, started doing it for myself. Within a few months, I was total failure.
Wow.
And it was purely because of the fact that I went from trading somebody else's money to trading my own money. Sure. It became my own money. Fear, greed, all kinds of things started kicking in, even though I didn't even realize it at the time, because there's a third emotion, which is ego, which was telling me that it's not you. Everything, you're fine. It's everything else. And it wasn't. So, I always say that, you can take my course, your course, anybody's course, go to Barnes & Noble, buy a book. Probably most of them would work until you put in the psychological, the fear, the greed component, and then they're all going to fail.
Right.
So to me, that is the hardest part of learning how to trade, is combating that part.
I agree. And when I've probably read 50 trading books, but I actually found the psychology ones more important.
Way more important. Yeah.
Yeah. To this day. Yeah.
I tell people that trying to trade and dealing with your emotions is like being an alcoholic, and your job every night is a bartender.
Right. Right.
I mean, you never let your guard down. Never.
Yeah. I mean, Alexander Elder was great. I remember Reminiscences of a Stock Operator. There were so many amazing stories in there. Yeah. Adrian Tograhy is a great trader coach. Yeah, there's a lot of good ones.
Yep. So if you were going to give advice to people that were starting out trading, what would you say the best advice you could give them?
For trading at all, or trading?
Yeah, no, just people starting out, new traders.
Easy. You need an objective trading approach. There's so many ways to skin the cat for success, and I define success as something that you can do systematically, you can repeat it, it's objective, and you make money over it, and you have proper money management. So I don't care what flavor that you use, but you need an approach. Ours is very detailed, the master trader method approach to trading. It's a compelling pattern on multiple time frames. We time it with other concepts like relative strength, weakness, the trend, support, etc. But find a method, paper trade, start slowly, and then start trading that method with very light share size, because we've been talking about the psychological component. It seems like everybody's a winner trading a simulation mode, but just let it, and now commissions are free at so many places. Trade 10 shares of something. I want to see your real emotions at work. Specialize in something narrow. We teach a lot of stuff, and you need that trading plan to say, this is my roadmap. So these are the patterns I'm going to look for. This is how I'm going to enter them. This is how I'm going to manage them. And if you genuinely have an understanding and you've internalized your approach on that trading plan, well, then all you're doing is executing in real time what your trading plan is already laid out.
Do you help your students create trading plans, or do you leave it up to them to do that?
We give them all the components to it, and then we have a template that we can send them also. But yeah, we give them all the components. We say, okay, you need a section on patterns. Here's your checklist before you enter. Here's your trading universe. Here's what the market internals should look like. Here's the liquidity. Here's proper share sizing. Here's how you're going to manage pivots for exits, and then they fill in the blanks for their personality.
And you just mentioned a minute ago, when they start out, they should trade small, because that's a good way of helping counteract, your fear and your greed. If you start trading too big, it's going to flare up.
Oh,
I always tell people that even after you find out what you're doing and you start developing a sense of confidence, I would still trade small and use the power of compounding to help build your account, as opposed to trying to increase the size of your trade to get more money, to grow faster. Just stay small. Stay small. Right. Let compounding work for you.
Yeah, sure.
Just like selling options, the time decay works for you. Take as many pieces of this as you can and let those pieces work for you.
And I'm changing the subject a little bit because you mentioned credit spreads again. There's some new people properly ask the following question. They say, Dan, the risk to reward of credit spreads is way out of whack. And here's what they mean. Let's say we sell a $5 wide credit spread, 50 cents a share. Because I teach them, I want a minimum of 10% of the spread, depending on pattern, et cetera. So I got 50 cents, you divide 50 by 450, which is your max loss, and that's your potential return on capital. But they say, Dan, why am I putting on this trade where my max gain is 50 cents and my max loss is $4.50 a share? And I say, excellent question. And then I say, if we're going to buy Facebook at $218 and we have a $3 stop loss and I have a target of $6, so, 2 to 1, do I say, Dan, why am I risking $218 a share to only make $6? We don't assume that the Facebook is going to zero. So we always take we talked about our stop loss, and then we also incurred, and we've never suffered a max loss in our history. That would only occur if you had a catastrophic gap against you.
Right.
But then the loss to the directional stock and option traders is going to be much worse.
Right.
So we teach them how to estimate what the loss would be if their stop loss gets hit. We say you can limit it at 2x your premium received. So regardless of where the issue goes, if that 50-cent credit all of a sudden becomes $1, it's fine to get out. So then we're risking two to make one, so to speak. But if you do the math with 85+% batting average, then it makes sense.
Right.
Just like, Wynn Casino and Allstate Insurance.
Right.
They're taking in premium. So, it's an uptrend. So we go 3 up, 1 down, or 5 up, 1 down, whatever the case. We had an impressive streak the last 3 weeks. We're like 38 for 41 on these credit spreads. It's when the market environment sets up nice, we're more aggressive because we see great setups. Right now, we're the market's getting overbought, so we're a lot more cautious right now. So it's funny that we get new people to our weekly options trader, and I can tell sometimes they say, whoa, I can't keep up with all your trades, slow down. And then other days, every 3 hours, they're like, hey, where's my next trade? They think it's you just walk up to a booth and we spit out trades.
Well, in our classes, I often bring up the point that the way we were raised, like with our parents or whatever, you were taught to work hard, right? The more hours you put in a day, the more money more successful you're going to be, the more you're going to make. Right. So I think a lot of traders, by the time they get to the point where they open their account and they're sitting in front of their terminal, they think it should be an 8-hour day job. And they should sit there and trade all day long, because that's how you work a job. And that's not how you do this. You work smarter, not harder.
Right. And, we have different types of subscribers, as I'm sure you do too. And we can, put them into 2 buckets. One bucket wants to take our seminars. They genuinely want to learn. And we know the old saying, they want to learn how to fish.
Right.
And so that's, you got to, take it serious, like trying to learn any new trade. Others say, look, just feed me the ideas. I know you all do a great job. Feed me the idea and I'll decide if I want to put it on for myself. I don't want to learn how to fish. Mm-hmm. And then some people say, you know what, I really don't want to do either, but I like the markets. I have a money manager. I core trade just the spiders. And so I want to have enough education to make sure that's being done in a prudent way for my long-term whatever goals are.
Yep.
So people, we can't force our wishes on them. It has to start with asking them, what are your desires? Of learning and trading, tell me what you want to do, and then I'll help show you what the proper path is to accomplish that.
If they even know what it is they want to do.
Yeah, and so much of it is just the excitement. And then
it's the game. It's like going to Vegas.
Right.
Another thing too I want to bring up that I like about our strategies here of selling options is that I always like to tell people that really, if you're going to be a really successful trader, you need to be diversified. And I don't mean through different industry groups within the equities market. I mean, you should be commodities, you should be currency, you should be equities. And the cool thing about selling options the way we do, that gets you into all those markets without having to buy a futures contract or open a Forex account. I mean, right. You can do it all through selling options and have the same advantages that everything you've mentioned so far.
We will sell options, Ron, on anything with a proper pattern, and that's liquid. So that's the only problem I've seen. I personally haven't looked at you but I know so many commodities are, unless you're dealing with the very thick ones, gold, oil, you can do the pound and some thick currencies, but most of the commodity ones are not very liquid, and so I don't know what the options are not liquid.
Yeah, we have a basket that we do, but it's not all of them. But the ones that we do are very, very, very perform.
How many would you say? Like 6?
Actually, right now it's 4.
Okay, so we're in agreement there.
Yeah.
But that's perfect because you don't need to. No. You don't need to look at 26.
No, you don't. Not at all. No. Same with the equities market. I tend to have a basket of things I look at, and it's very narrow.
Good. Yeah, we have a list of liquid options, which is really less than 125 issues. That's the problem.
Yep.
But that's plenty. If your trading universe is under 100, then that's wonderful.
Yep. 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 So if people would like to get a hold of you and find out more about what you do, where would they go? What's the way to do it?
Mastertrader.com. They can sign up for the chart of the week, and that will then allow them to get invited to our chart of the week, to our Master Trader Live, which we do every Wednesday on YouTube. It's a 1-hour educational show on a great topic every week. We invite them to other seminars. So do that. Just put your name in mastertrader.com, or they can email me, dan@mastertrader.com. My partner, Greg Capra, is just one of the pioneers in technical analysis. I've been working with him for over 2 decades. He's greg@mastertrader.com. And, a lot of people can talk on a radio show or do a little webinar. But I think the proof is in the pudding. And so we give trials out to some of our products, and come see us in the green trading room, and you will see us walking the talk. You'll see us analyzing the market, see us entering trades, managing them, doing live scanning, answering questions during the day. So I think to get a lot of people see us on YouTube and our Master Trader Live and say, oh, okay, these guys.
And by doing it that way, you really can't cover anything up. If you're wrong, right. You're wrong.
Absolutely. Yeah. We have 3 advisory letters, and we keep separate Excel sheets on each one of them with all of our open and close trades, so we have full transparency. And but I kind of think the best is hearing us also and interacting in real time. And that would be our green trading room.
Cool. Okay. So before we end it, anything else you want to toss in or mention or add? Or
I think, I mean, you were great with the questions and directing us into the psychology on how to start slowly. But I would conclude with, we get so many new people and we have just amazing testimonials where people say, I am so glad I finally found you, because they get caught up in snake oil salespeople who try to sell some proprietary nonsense and keep you locked into their method, and then they blow up, and then they're looking for the next thing. So they need to do. But how do you teach somebody to do homework? Was it really their fault that they ended up at 6 bad companies in a row?
Yeah.
So referrals is good, research, and but just don't believe in. We don't use the word proprietary anything. In fact, Greg Capra scans on Telechart 2000. We give them to our subscribers. We teach you the method. Here's our scans. Now you go out and try to follow the checklist and make money with them, and also share your results with me because I want to trade it too if you find it.
Right.
So yeah, just have an objective approach. You don't get caught up into nonsense. I know that's easier said than done, but.
Okay. Well, thanks for being on. It was fun.
Thank you, Ron.
Talk to somebody who talks the same language.
All right. I appreciate it. Yep, okay. I love it.
Thank you.
All right, good day.